an order flow is divided into two: bullish order flow and bearish order flow. And a bullish order flow is a selling move before the rally up. So basically it will be something like this: a selling move before the rally up. And this selling move is what we call the order flow. Like the whole selling move is what we call the order flow. And the bearish order flow is now the buying move before the rally down. This is actually the opposite of the bullish order flow. So we'll be anticipating something like this: the rally up before the buying move before the rally down. So this whole buying move is what we call the bullish order flow. Alright, so yeah, of course, an order flow is abbreviated as OF. The short form of an order flow. So let's say you don't want to write like the whole form, like the whole word, you can just use order flow. Like you can just use OF and it can be understandable. So right here, like I said, divided into two, and this here are the definition of the the bullish order flow. That's the selling move before the buy, and for the bearish order flow, it's actually the buying move before the sell. All right, so like an order flow, either bullish or bearish, it can be mitigated or unmitigated, but we are only interested with the unmitigated ones because the mitigated ones are already tested, and if it's tested, then it has no it's already tested, so there is a low probability that price will be reacting from it. So the unmitigated ones, the ones that are not tested, those are the ones that we're interested at. So right here, but our interest is on the unmitigated, or simply the ones that are not mitigated. So if it's not mitigated, that's where our interest is. If it's mitigated, we just ignore them. Right, so with this said, now let's go on to the real chart so that we can identify them. Yeah, you can identify them on a real chart. And exactly right here, like I said, so let me just use the brush. So right here, this here is a break of structure. So this means that this one here is the minor inducement, and we said that we confirm a swing point after the minor inducement. So price did that, you can clearly see. So that's a confirmed whatever, and price reversed back and broke past that. So this means we are currently in a trading range, and that's the high. And currently this is the low, but this low is not confirmed because the inducement is yet taken out. Alright, so right now let's identify the inducement, because we don't mark POIs before the inducement, but you can also, if it's an order flow, you can, but I usually recommend it first. You wait the inducement to be taken out before you mark your POI. An order flow is an POI, of course. So right now, let's see if price will take out the order flow or not. And right here, price is heading down. So let's see. Yeah, exactly right there. And exactly there, price took out, price broke past this low. And if I zoom here, because right here I can clearly see that there's this pullback, so probably someone else would say that this one here is the correct inducement. This high will say it's the correct inducement, but in the real sense, is it the correct one? In the real sense, it's not, because you can clearly see here, like this week didn't broke past this low. So this means that this pullback, yes, it's a valid pullback, but it's engulfed inside this order flow, like this. Yeah. Right, so right here, if I take this order flow, you can clearly see that it's from there all the way up here. So you can see it's engulfed inside and it's not seen. So that's let me reduce the opacity here. It's very high. So let's say 15 will do. Yeah. Right, so right there you can clearly see that price this here is engulfed, so I'm only focused with this high. So this high now will be the high of the recently formed valid pullback, and I'll be waiting for price to take this high for me to confirm the inducement takeout. The inducement takeout, and for me also to confirm the swing point so that I can now start marking the POI. And of course, the POI that we are marking today is the order flow, and we are not like marking it. We are actually just identifying we are marking it, but we are not identifying the correct or the valid ones that we will now be using to enter the trade from, or will now be using to get the reversals from. right here you can clearly see a sweep past the inducement. So this means that we have got our low exactly right here. So that's our low. And right now, this is the moment that I will recommend you to start marking the order flows. Alright, like I said, we are marking the order flows on the impulsive move. So you all know, and I showcased like what's an impulsive move and what's a corrective move. So a quick recap, this one here is now the corrective move. Like this leg that takes out the inducement, it's what we call the corrective move. And the leg that now reverses, breaking the structure to the downside, that's what I call now the impulsive move. So we are only marking the order flows of the impulsive move. I should not expect someone marking them on the corrective move or on the leg that takes out the inducement. Alright, so with that said, now let's start marking the order flows. And also the order flows are started to be marked from the top end of the out from the extreme of the trading range, either bullish or bearish. I would recommend you to start from the extreme. And exactly right here, I can clearly see this buying move before the sell. So that's the first order flow. I'll be marking all of them, no matter mitigated or not. I will be marking all of them so that now later we can identify the unmitigated ones and the mitigated ones. So right here, this is the selling move before the buy. All right, so right here, all the way to the top there, that's the first order flow. Right, coming to this second one, I can clearly see this this one here is the second one. So right here, that's the second one. Yeah, exactly there, that's the second one. And the reason as to why I'm using that, I believe by now you know already. Like if I draw a line on this red candle, starting from there all the way here, and I also draw another line on top of this candle, you can clearly see that all of these candles we are actually engulfed by this candle. So all of these mid candles we are engulfed, and you can clearly see here this is a valid pullback. We said that in a bearish scenario, the valid pullback is formed after price takes out the high of the previous candle. Right here, you can clearly see that this red candle, the high was right there, and price took like you can see this candle that I marked the two lines. I mean this candle that I marked this line and this down line here. This candle took out the liquidity resting above this previous candle. So this means that this one is a valid pullback. And that's the reason as to why I marked this order flow. And right here, all of these are just inside a buzz. So this means that this order flow is not mitigated. Alright, we'll identify and I'll showcase if it's mitigated or not. Right here, I'm actually seeing another valid pullback. So right here, price closed there, opened there, went down, and then up, took out the high of that high. So this one here, even though it's a one candle, this one is an order flow. So yeah, exactly right there, that's an order flow. And now the last order flow is the one that I marked while I was identifying the inducement, this order flow that I marked. So literally in this trading range, there is how many order flows? There is 1, 2, 3, and then finally 4. The fourth one is the one that comes before the inducement. It's not like a must that the fourth one should come before the inducement. No, I mean in our scenario, the fourth one is this one here, and it comes before the inducement. Alright, so right now, if I was to identify the ones that are mitigated and the ones that are not mitigated, of course, you can just see this one here is already mitigated, and we said if it's mitigated, we ignore it. Another one that is already, alright, so this one here has no negotiation. The order flow that comes before the inducement, you should always ignore this. Always ignore this, like always, don't consider that, like always. So in this case, then I just delete it. Yeah, I just delete it. Yeah, don't draw that order flow. Just assume like there's nothing there. Yeah, even though price may give a reaction from it, just know that this reaction is fake. You can clearly see someone else would have taken out the trade from this reaction after seeing that the reaction from that order flow. Probably would have taken out maybe somewhere here after seeing that whatever stop loss above there, and you can clearly see stopped out. So don't do that. Even if you see a possible, like even if you see a lower time frame confirmation, like very aligning with the reversal, don't do that. Don't just ignore this order flow. Make sure that that's the reason as to I'm saying for you to mark the order flows first. Make sure that the inducement is taken out. So right here I can clearly see the first one, it's mitigated, and it's mitigated by this one here. Yeah, this is a very important thing. The mitigation needs to be by a valid pullback. So this means that our order flow was not mitigated by that, but it was mitigated right there. So this means that this one here is not a valid mitigation. The valid mitigation was right here, because that was the valid pullback. An order flow is considered to be valid if, a mitigation is considered to be valid if it's by valid pullback. If it's an invalid pullback, the mitigation is considered invalid. I think you get me right. If the mitigation is by a valid pullback, that will be a valid mitigation. But if the mitigation is by an invalid pullback, that will be an invalid mitigation. So this means that the order flow will still be holding. Right, so exactly right here, you can clearly see that this order flow then is not mitigated. Why? Because this one here is an invalid pullback. So this order flow is still live. So this one here is a live like a live or unmitigated order flow. And yeah, we said we are only interested in the unmitigated, and of course the second one that is unmitigated is that one there. And probably now price will be reacting from either these two order flows before reversing. I will be covering about which order flow like is valid, which is the decisional, which is the extreme, because you may find in a scenario where price may create like more than this. In this scenario it was only 4 order flows, or let's say 3, because we are ignoring the one that comes before the inducement. In other scenarios, you may find that price may print 2 order flows, sometimes 4 order flows, sometimes even more than 5, sometimes 6 order flows, sometimes even more than that. So in that case, now how can you know, like I will be choosing this one to get a reversal from, and I will be ignoring this one. Even if I see a reaction from this one, I will not take that reversal. But if I see a good reaction from this one, I will take that reversal. So in that scenario now,
Can I ask a question?
you will ask after I, or wait, you can just ask. All right.
Okay, the first order flow that you say is not mitigated.
This one.
Why did you mark it all the way to the down? Show the line. Show the full order flow.
All right. So let me show you. If you want to get it right, you can just use a path like this. So you can go like that top all the way here down, again like that. Then this candle, you can see right here, it ended here. This here was the highest, like the lowest point. Then price ended up closing, creating that pullback. And so right now I'm going onto the high of that pullback, and then finally going to the low of this area. So will I be marking right? So you can see here there is no any valid pullback, so the pullback will be here, and then going all the way down here for this one, and then finalizing with the one with our trading range low. So if I get to remove this path and I do this, you can clearly see that we only have how many pullback, how many order flows here. We have this order flow, again another order flow here, you can clearly see, and then the other order flow is this one here, that one, and then finalizing with this one, which we said we don't use that. So you can clearly see that's the reason as to why I didn't mark it all the way here, because it wouldn't be making any sense, because now I'm marking even the selling move, and we said it's only the buying pressure or the buying move before the rally down. That's what we call the bearish order flow, because we are currently bearish according to the structure. So this here will be bearish order flow, bearish order flow. Why? Because we are bearish. So this is not a bearish order flow, because I've also included the rally down. I need to only include the buying move, and this was the buying move. The buying move started here and ended here. So that's the only buying move that I'm interested at. Right, so I'll be deleting this, and I believe you have gotten right. Yeah, good. So right here you can clearly see yeah, so right now I'll be running price and see. Yeah, this one is not mitigated because I've said all of these candles are inside a buzz, and if they're inside a buzz, this means that there is no any valid pullback here. So this means that this order flow is not mitigated. Yeah, you should note that. Right, so right now let me run price and see what price does. All right, I've said that I will not be showing like which you will be trading from, like which will be getting the reversal from. I'll be showcasing that on the next session. Today I was just showcasing how to mark the order flows. All right, so yeah, let me continue. You can see price is reacting from this order flow because it was unmitigated, but later it did that and ended up mitigating the extreme one exactly right there. And you can see upon mitigation it's now reversing, and probably I'm anticipating it ended up breaking past the external liquidity. You can clearly see, and eventually made it out to the external liquidity. Yeah, so you can clearly see that if, let's say, I had considered this one here to be mitigated, this trade probably I would have missed it. Yeah, so right here, this here was the change of character, I mean a break of structure. So our high of course will be this one, and we are currently in a new trading range, so we start marking the order flows again. Our break of structure was this one, this here was just a low. So the one like this move that took out the inducement, we said it's what we call the corrective move, and we said we don't mark the order flows from the corrective move. We mark on this leg that now reverses, breaking past our swing point right here. That's the move that we'll be using to mark the order flows. And since we are bearish, this means that we are only marking the bearish order flows. Since we are bearish, I mean since we are downtrending. All right, so right here we said if you want to, all right, let me delete this so that I can clearly see we are going down and down and down. So let me get rid of all these. All right, so exactly here we said that if you want to do it right, make sure that the inducement is taken out. So right now, where is the inducement? Yeah, let me just use a line. Right now the inducement is this one here because that's the recently formed valid pullback. So let's see. All right, price ended up creating another one here down. All right, it's this one actually. Price created this one here. Yeah, so we'll be waiting a takeout past it before it. Yeah, exactly. So price has taken out that one, and hey, that was very abrupt. So I think I should delete this. Yeah, like that. I think that's good first. So now that candle was due news, so it will still do the same. So let me just, yeah, that will be fine. So the inducement is taken out and we have just confirmed this low, and right now is the moment to mark the order flows. Like I said, we start from the top. So this one here was the buying move before the rally down. So this here is the first order flow and it's not mitigated. Coming up down, coming down, you can clearly see this order flow. It's already mitigated. You can clearly see another one, which is this one here, and it's already mitigated also. I can also see this one here. Is it that one? Right, it's this up, this one here. Yeah, exactly right there, and it's also mitigated. So again, I can see this one here, and also mitigated. So I can just pick the next one, but let me just do it for the sake of the class. That one again, there is this one here which is not mitigated now. So this here is the order flow that is not mitigated, and but all of these are mitigated. So this here is mitigated, and this one here was mitigated exactly here. You can see this valid pullback, that's where it was mitigated. This one here, it was mitigated by this move, and this one here was mitigated right there. So you can see the ones that are unmitigated is this one, and this one. And down here I don't see any other, I don't see any valid one. Yeah, the one that I'm actually knowing is this one here, and we say that this one is not a valid one. So this one here is mitigated, so mitigated, all of these are mitigated. This one here is mitigated. So yeah, this one here is the only one that remains unmitigated, and this one here. So those are the ones that we'll be anticipating the reversal from, and sometimes there may be more than two. So in that scenario now, how can you know which one to trade from? So that is what we'll be covering tomorrow. Yeah. So right now you can see price has mitigated this one, and it's actually doing that because this one here is unmitigated. It was not tested before. That's the reason as to why price is rejecting like that, and I'm anticipating that price may respect it. Alright, so exactly right there, price is doing that, and eventually price broke the structure to the downside. So right now we are actually in a new trading range. So this one here will be now the valid breakout structure. This one here will be our high, and yeah, so the process continues. You start alright, let's first make sure the inducement is taken out. So alright, price has created the inducement. So this one here is our inducement. So let me see if price takes that in the inducement. Alright, price has taken out that one. So right now we can start marking the order flows. It's actually a good practice first to wait for the inducement to be taken out before you start marking the POIs. Alright, so right now I can see this one here is the buying move before the sell or before the rally down, and it's already mitigated. So the next one is this one here. It's not mitigated, exactly right here. I can also see this one here. Yeah, this one. So this one is not also, oh, it's mitigated exactly here. And the other one is this one here, but we said we don't mark this one because it comes before the inducement. So yeah, we said we don't mark that one because it comes before the inducement. I mean this small one here. And we can clearly see price mitigated it exactly right here. It gave that reaction, and someone else would have taken this trade here. Yeah, right after seeing that rejection, probably would have taken that trade, stop loss above there, and you can see stopped out. So that's the reason as to why we usually don't do that, because price first needs to take out the liquidity, before it actually reverses or before it gets that fuel to moment to make it move. Because just like a car needs fuel to move, yeah, a car needs fuel to move, now price needs liquidity to move. So I think the liquidity in this case will be using it like metaphoric, that it's the fuel to make it move. So without that, now price cannot move with its or continue with its prevailing trend, of course, because it's going down. So right now you can see this here inducement is the first buy side liquidity. So that's the first liquidity that price is heading. So buying or selling before the inducement is actually a self-suicide. So right here, that's the reason as to why we usually wait for the inducement first to be taken out. And right here, we can clearly see that this order flow is mitigated and this order flow is also mitigated. All right. I know someone else is saying, or maybe probably thinking, why I didn't pick this one here as the order flow. I mean, why didn't I pick this one here to be the order flow? Sometimes maybe from my forecast on TikTok, not on TikTok, I mean on Telegram, you may find that I may pick this one here without, like in this scenario, you can clearly see that this is a valid pullback. So you may find sometimes I may pick this one rather than picking the whole move. But the correct one is this one here. It needs to be the correct, like the whole move. The reason as to why I usually pick this is because I have refined it in such a way that price sometimes may come all the way to, like, let's say it was unmitigated, like all this move it was unmitigated, then price sometimes may dip in into this refined one, and in that case now you would have you have reduced your risk as well as your stop loss pips. So in that case, that's the reason as to why I would I just refine that. But first need to make sure that you have marked the whole move and the whole move is not mitigated, but the correct order flow needs to be the whole move, like the whole move. Yeah, that's something that is very correct, like, because if you just picked this one here is not mitigated, and you would have said that this one is a correct order flow. Probably you would have said that this one is a correct order flow because it's not mitigated, but in that case you would have failed because that's not the correct order flow. That's actually the refined one. So that's very, very important, and you should consider that. All right, so the correct one is that one, and you can clearly see price has mitigated it exactly here. So this one here, we said we ignore this, and I will not mark that. I usually don't mark that. All right, so this one here is the only order flow that is left in our trading range, and probably I'll be anticipating a reversal from this order flow. Price, I'm anticipating that price will go the way to the order flow before making or before reversing back towards this breaking past our swing point. And by the way, it's not a must that price should reverse all the way to the order flow before making the reversal. We say there is these liquidity levels. Anyway, right here we can clearly see that price made a change of character instead of actually mitigating our order flow and making that reversal. And see price made that change of character. So this means that we are no longer bearish, but right now we are bullish. Right, so yeah, let me continue running price and see what price does. So of course the process is the same. Identify the inducement, and then yeah, wait for the inducement to be taken out, then start marking market structure. Start marking the order flows. All right, so you can clearly see that this one is the major inducement. So we are probably waiting a break past that or a takeout of it. Price created another one, so we'll be shifting to the next one. Of course, I know you know what I'm doing. All right, so yeah, another one is created here. We said we shift to the recent. I believe by now you all know what I'm doing right now. So that's the one again. Price created another one, so shift to the next. So not until it's taken out, I'm not confirming the whatever. Alright, so right here, I got some questions why I didn't confirm this one, and I said that the retracing candles need to be less than, more than at least 3. So that means 3 or more than 3. So in this case, and also the thing that I failed to note is that even if you can clearly see that this is 1, 2, 3, but this one here is not closing below each other. They need to be closing below each other. Like create this one. If it's an insider bar, we ignore it. It needs to be closing. So that's the reason as to why I counted this one and this one here. So in this case, these are not 2. These are 2 and not 3. So in that case, this is not a deep retracement or a retracement to be considered valid. And in that case, now you will be like shifting this inducement to this one here, to this low, to this newly formed low, and that's what will be now our new inducement. All right, so right now let me see what price does. So we said that after price has taken out the inducement, that's when now we start marking the order flows. So right now let me see. All right, price has taken out the right, so price has taken out the order flow here. So let me rewind. Exactly right there, that's where price took out the inducement. So this means we have got our high and we have got our full impulsive move. The reason as to why I usually wait for the inducement takeout is because I want to get our full impulsive move, and the impulsive move starts from here all the way to this high. It's also the trading range, so impulsive move or trading range. Alright, so obviously after the inducement is taken out, you start from the extreme, and this one here is the order flow on the extreme, and you can clearly see it's mitigated. And in this case now, alright, so in this case, note what I'm doing in this case. I believe this is a valid pullback. Yeah, that's a valid pullback. So in this case, note what I'm doing. I'm actually marking from this end. I'm marking it from that part, and I'm not like using the whole move that starts here. You see, I'm not using that, I'm actually using this. So the reason as to why I'm doing that is because of this here. You can clearly see if I take the path, obviously price, let me start there. You can see that this is a valid pullback. You can see that's a valid pullback. That's the low, the high. This is also a valid pullback, and you can clearly see that this broke past that, and then price can clearly see down, created a valid pullback, and then did that. So when you see this now is different because you can clearly see that price is being as like price is breaking past. You can see a break. You can see like a small coach, not a coach, but like just a small coach, like a break to the downside again. So you will be picking this one here. So you'll be picking this one. You'll not be picking like the whole move now. You'll be just be picking this one here. In this case, the reason as to why here I picked the whole move is because there is no any whatever here. This is just like if I do this, like you can see this is just that, and then price did that, and then finally did that, and went down. So in this case, I will like if let's say it was something like this. Now in this
Excuse me,
case,
bro.
yes,
Why you say that it's a valid pullback? Like
I mean
you said that it's a valid pullback. The order flow, the extreme order flow
this one here,
on the downside. Yeah, you know, go on the left.
left
Yes,
again,
the pullback.
this one here.
The pull, no. The pullback. The first pullback on the bullish scenario. Down on the down. Yes, there.
Yeah, that's a valid pullback. Should I like showcase this? Yeah, you can clearly see here. That's a valid pullback because this here was the low. Let me show you.
Mm-hmm.
If I remove this, you can clearly see that, and I draw a line from that end all the way here. You can
Okay.
clearly see that this candle broke past that, right?
Mm-hmm.
Yeah, I think you've got it right.
Uh,
Yeah.
okay, thanks. Sorry.
All right, that's good. So that's what I'm actually talking about.
Guys,
So
guys, I want us to finish the class before we start asking questions. Honestly, a lot of people have questions, but we just want the class to within the timing so that we don't waste unnecessary time. Please, I beg us, please. We can keep your questions after the class. Let's ask our questions, please.
yeah,
Thank you.
Thank
Thank
you.
you.
Sorry.
Thank you.
Thank you very much. Thank you
Thank
very
you.
much. I abide by what Luap is saying. Please, let's do it that way so that we
yeah,
won't be confused. We are in a class.
yeah,
Kindly ask your question, then we all have our questions to ask.
yeah.
Thank you
Thank
very
you.
much.
All right, so this here is the extreme, and then after that, the reason as to why I will not mark this one is because this one is not a valid pullback, and we said we only consider valid pullbacks. That's the reason as to why I say like the first session was very important. The valid pullback identification, that part is very important, and it's the part that people ignore actually, but it's the foundation actually. So right here you can see this one here, this order flow is mitigated. So yeah, exactly there, and then the other one, which is this one here, is also mitigated, and the one that is not mitigated is this one here, and probably is what price reacted from. This is not mitigated, I can confirm. Oh, all right, it's mitigated exactly here. So if it's mitigated, yeah, we said we ignore that. All right, the reason as to why I will not mark this one here is because it was formed before the inducement. So yeah, exactly right here. The only order flow that was not mitigated was this one here. So this here was the only order flow that is valid in this case. And I said it's not a must that price should reverse like all the way to the unmitigated order flow so that it takes the reversal. Yeah, so like price can actually reverse it it likes to reverse from. It's just that this is a strategy and we go up by the strategy. So according to the strategy, it should be reversing from this side, but price decided to reverse from that, and that's good. So right here, price did that, and you can clearly see price reversed after that, after mitigating that decision order block. And yeah, exactly here, that's a break of structure, and we said we wait for the inducement to be taken out. So we are currently in a new trading range, so that's the inducement, and of course this one here is the low. Yeah, that's the low. So right now, yeah, this is the inducement. So let me continue running price and see what price does. So price creates another inducement on top there, so I'll be shifting to the next one. All right, so right here I'll be shifting to, yeah, to this one here. Again, price created another one, so of course shifting to this one. Again, if price creates another one, be shifting to the other one. All right, price took out that, so that's now the correct timing to mark the order flow. So of course that's the first order flow that we should be marking from. Exactly right there, you can see this is a valid pullback, and this order flow you can clearly see it's mitigated. So diving to this next one. Yeah, this is not mitigated, should end here. Coming up, you can clearly see these are all mitigated now. This one is mitigated, as well as, is this valid? No, that's not valid. So is that one. So there's no any other. And where is it mitigated at? Oh, all right, this here is a valid one. Yeah, there is something here. This one. Yeah, so that's what I'm talking about. And this one is now the inducement. So right here, like this one here, I said we don't mark this. So yeah, so right now I will be waiting price to reverse from this side, or let's say I was to take this trade. So let's say I'm in live market, I will only be taking the reversal from here. We will be diving deep into this, where to take the entry and all of that, but this is just marking of the order flows, and you can see it's actually easy. On a bullish trend, we are actually marking it. The only thing that you need to note is that we are marking it on the trading range, and price should take out the inducement, and we only getting, like, we only focus on the ones that are unmitigated. The ones that are mitigated, we usually ignore them as if they are not there. So yeah, you can clearly see price did that. And all right, so probably you can see price has mitigated this. So that's when now you will be taking the entry and all of that. So all right, price eventually decided to break the structure to the downside, and yeah, it still happens. I know someone else would take this trade because price did it like close past the order flow, it just wicked below. But if you check out this week, you can see that this week broke past this trading range low, and you can clearly see the trading range low involves a major inducement. So this here is an early sign of a change of character, and in this case you should not be taking the trade, not unless this week didn't make it out to the trading range low. Then in this case, then I would recommend it, highly recommend it, to take that trade. So let's say from there, and let's say the week just ended inside here without sweeping the whatever, then now you can take the trade and obviously target the external liquidity in that case. But if price wicked below here, like, don't do anything. So guys, I will end it here, but I believe, all right, let me just mark for this one because the inducement is already taken out exactly here. So we are bearish. I said if there is a major, if you finished yesterday's class, you will notice that this scenario I covered it. And if I said if it's involving a major inducement, then the trading range low. If it's a break by a wick or a break of structure, I mean if it's a break by a wick or a candle close past the trading range low or high depending on the structure, and it's involving a major inducement, that's a change of character. So this means that we are currently bearish right now. So right here, this here is the buying move before the sell. So right now, since we are, we are bearish, this means we'll be identifying bearish order flow. So that's the first order flow and it's already mitigated. The second order flow is this one and it's already mitigated. Yep, it was mitigated where? It was mitigated here. Let me show you where the price mitigated this. Price mitigated it here by this move. Like this is a valid pullback and is the one that I'm actually marking right now the order flow from. Yeah, exactly right there, and it's also mitigated. So yeah, right there. So if I am marking again another one, I will be choosing this one. Yep, so this one is the next one and it's already mitigated here. So I can see in this case all of our whatever is mitigated. So if I was to take the trade, of course now I'll be diving into the secondary option, which is now the order blocks, and I will be marking everything like tomorrow. I mean, when we get into the order blocks, I will not showcase that. But today I was just showcasing, or just I didn't just marking the order flows on the charts, and this is actually something that needs a lot of practice. So yeah, get a backtesting tool or a backtesting software. Let's say the one that I'm using, very cheap. Yeah, you can use that and just watch this video and yeah, you see like it's very easy in identifying the order flows. Yeah, and tomorrow now I'll now be showcasing like which order flow to pick, which order flow to use, and when will you now be not using the order flows but now using the order blocks. All of that we need to cover because the part of POI is very, very important. Very, very important. Yeah. So exactly right here, I don't know if price has mitigated this. Price did it mitigated that. But yeah, price didn't mitigate that. But if I was to take this trade, I would have taken it from here because above here, I can clearly see that this here was the extreme order block. Yeah, I'll be diving to why I picked this one here and not the ones that are inside there when we get into identification of order blocks. So you can see the extreme order block is mitigated and this is the order block that remained. So if price had mitigated this order block, in fact, in this kind of scenarios, I usually just place a sell limit order on that area. So probably I'll just set a sell limit order here. Stop loss. If I was to be aggressive, I would set it right above the POI. But conservative, I would just place it at the trading range high. No, in fact, this is a low probability setup because it's involving a minor inducement, and this means that our trading range high is the major inducement. So this means the safer stop loss is some pips above this high. So in this case, this trade will now be very, very bad with the risk to reward. So you can see the risk to reward is less than 1:2. So in this case, I don't take this trade. But if let's say you was to be conservative, then aggressive, then you can just set your stop loss above this whatever, and you'll be like whatever happens happens, and yeah, just accept the consequences. Right, so I'll be stopping here, and I believe like you've gotten the way to mark the order flows. The identification of order flows is easy. The challenging part, I guess, is when to identify the correct ones, because there is sometimes when in a trading range you may find like more than two valid order flows, and in that case now you cannot you may find it hard to identify which is the decisional order flow and which one is the extreme order flow, because like I said, if you've been watching my YouTube videos, there can only be a maximum of two valid POIs in a trading range. So we'll be covering all that in the next sessions in due time. So each session has its own coverage, and for today's session I have covered what I was to cover. So yeah,